All right. Well, hello, Yanni. Hello, Gibson. Hello, anybody else that is here or is watching the replay. How are you guys all doing? What's up, Jason? And Moongod. I already said hello to you, but hello again.
Hello.
So, yeah, the bot is back to doing its thing. So we're gonna have some stuff to talk about. I wrote down all the questions I found in Discord. So I'm gonna have some questions for Moongod. And of course, if you guys have any other questions, feel free to leave them in the comments. But Moongod, if you just want to say something before we launch into these questions, go right ahead.
Don't really have anything new to say on this side. We can pop right into the questions.
Alrighty, alrighty. So no order at all to this. So I'll just start with Lucky's questions. He had a bunch of them.
Okay.
So yeah. So we're gonna start with a banger here. So Lucky asks, will you guys revert to manual trades to catch up the lost months?
No.
All right. What's the main catch perimeters set at the moment for the bot target range?
I'm not sure exactly what he means by that, but I'm
Yeah,
gonna just
those
go on
are.
the assumption that he just means how did we decide on like 3,000 to 4,000? Pretty much that's what the range of Ethereum was at the given point in time, and as it moves up, uh, the system will adjust to encapsulate a new range. And we've been looking at some options for how to kind of do that on the fly to make this process a little bit better, so we don't run into a situation where we're experiencing what we're experiencing right now, where it was trading outside of the range, and then we basically just had to sit there until it got back up, and then we could liquidate some stuff out. So we're looking at some options for that. That's part of the testing process we're going through right now.
Cool.
With that, we don't want to just kind of blindly release something that we think will work. We want to test through it, make sure it does work, and then we'll probably test it with a smaller amount of funds just to ensure that we don't run into any kind of problems. So,
Yeah.
yep.
I gotta say, you guys are very, very mature traders. You are not at all like me,
Well,
who put some money on Gordon the Bird. And would you believe I actually am down?
I mean, here's what I'll say is when it comes to things like, the project funds, the NFT funds, stuff like that, we're very, very safe and secure with that. But I'm in a couple of DGen groups and stuff like that. Every once in a while, I have some just, what I like to call just casino money, so to speak.
Yeah. Yeah.
Um, and I'll throw a little bit into something, nothing crazy over the top. Usually it's like maybe $100 or something like that. The
Oh
idea
man.
and the logic behind it is, have a little bit of fun every once in a while. The idea is like if you were to go to a casino, you go with a set amount of money and you don't exceed that amount of money at a given point in time. And
Yeah.
so that's kind of the logic is, each of us has our own things that we kind of get into personally just for fun to kind of de-stress a little bit or just, hey, we can get lucky
Yeah.
with the moonshot. But
Yeah.
yeah, we
The
don't
problem
look at it as
is
like
when
a
it's like
project.
all that. Yeah. The problem is when it's like all that you have, you just degen all the time.
Yeah, exactly. Still a vast majority of mine and even Callie's funds are set aside to test stuff out. So I actually hadn't done any quote unquote like degen plays, I guess if you want to even call it that, for like almost 2 years at this point. So I threw some stuff in a couple of other things the other day, lost like $70, and I was like, all right, well, we're just
You
gonna
make
call it
me
a day there. Just
you make
move
me
on.
feel better.
Yeah.
You know,
So,
I was just thinking like I've been in crypto now for like 4 years or so because I got in at the end of the last bull, and I was just thinking to myself, I'm like, I chased all these different degen things, did a bunch of dumb shit in like Seifu, and I was just thinking, man, if I had just played it safe with all the money I've put in crypto, I'd be doing really well right now.
oh yeah, especially if you went all in on like say Bitcoin or something like that. But
Yeah, I mean,
yeah,
it's just over the past 4 years, I've put in so many thousands, and if I had just like, if someone had explained to me the cycle, the 4 year cycle, and that I should have just like not bought things at the top of the bull and waited for the bear market to start buying, like, but anyways, these are things you learn.
Yep. Yeah, and like I said, with actual funds within the project, we never do anything like that. We have like 8 layers of checking stuff. Like, between me and Callie, we double check, triple check, quadruple check. Like even adjusting some of our liquidity farming and stuff like that, like LP farming that we do, we go through about 15 different iterations of how we want to balance things out to ensure that we're within a scope and a range that's going to give us, returns that we're going to be happy with month over month, but it's not going to put us in a position where we're constantly having to like rebalance stuff. So,
I
yep,
got you.
that's pretty much the idea behind it is, we want to be safe with the things that we're doing. That's why we
Yeah.
take a little bit of time. That's also why we don't manually trade either. To go
Yeah.
back and kind of cycle back to that first original question, is that we don't want to let, for lack of better terms, human mistakes and human greed take over what a bot can do. So human greed may tell you to, oh, I want to stay in this until I'm up 5,000% or something crazy like that, or whatever it is. But the bot will be like, nope, we're up 8%. We're going to close it out. We're good to go. And then it's like waiting for, I said 5,000, but like, let's say 10%. But
Right.
the problem that you run into is like waiting for that 10% and it doesn't come, and you end up having to take a 1 or a 2% profit instead of just taking the 8%. And it's like,
Right. Right.
that's more along the lines of kind of what can happen with like human error, is that, we get to a point where there's, an overly abundant amount of greed.
Yeah.
And humans
Yeah.
make mistakes. So we try and take
Yeah.
that off the table. But that's why we don't manually trade. The only time that we do manually trade is if we're having to protect against like a loss or something like that.
I got
Um,
you.
so like when we were in the short and we had to hedge it to the long, we basically set it up to flip the other direction. So yeah, that was kind of the only time that we, manually opened up some positions, but that was again to protect, to protect our current position and be able to start kind of like moving the other positive direction with it. So yeah.
All right. Cool. All right. I got more questions from Lucky.
Sure.
So moving forward, will you be more aggressive with the trading or conservative?
It kind of depends. We're looking on revamping the way the bot works, because we basically had 2 iterations of the bot. We had the one that we're currently in right now, which is it trades within a range. When it moves out of that range, it hedges by, holding assets aside. The other one is it just opens up longs and shorts, and whatever direction it starts going, it just dollar cost averages until it basically runs out of money. And we generally don't like that. It's a little bit riskier. So we're looking for something that's kind of in between, where it gives us the ability to kind of continue to have trades being opened and closed as time kind of goes on, to be able to take, into account some of the volatility, even if things move outside of a given specific range that we're expecting. So as an example of such, there was a ridiculous amount of volatility within about the 2,400 to about the 2,700 range, right closer to about 2,600 range. And we actually had our LP farm set up, and they were taking advantage of that, and doing pretty solid. So like if we had all of the funds, if they would have been in the LP farming, we would have actually, I think it would have ended up being something close to like 5 or 6% month over month. But because it was such a smaller amount of funds that we had pulled out, it ended up only being like, like a couple of percent or something like that. It was like almost nothing comparatively speaking. But I mean, that's because, hindsight's 2020, and we can look back and be like, hey, this is where we're at.
Yeah.
But yeah, there was a huge range, I think, from like 2,400 to about 2,600, where it was just the volatility was monstrous, where it was like 2,430, and then it was like 2,590, and then it was like 2,410, and then it was like 2,630, and then it was like 2,510. So it was like up and down and up and down, large enough swings that we could take advantage of it. But yeah, it's something that we're looking into. Again, it's part of why we can't just rush stuff and just throw money at it and hope it works. We're going to have to very safely test it and make sure it works the direction that we want. It's all part of the revamp and the testing processes that we're doing, especially including as we kind of announced, we're looking into like Bitcoin, BNB, and then I think the other one was either Solana or XRP. I can't remember which one it is off the top of my head. And Discord
What's
is not loading.
yeah?
Yeah.
When okay, go ahead. You can finish. Go ahead.
Oh no, I was just going to say, but yeah, we're looking to expand out, so we're not just going to be in Ethereum. We're going to be in multiple other coins as well. So it'll be a case where we can take advantage of something else moving up or moving down within the market. So that's kind of the mindset and the goal.
Cool. Now, when you say you're fully DCA'd, that does not mean that you have like in the NFT fund where you guys are using like 125,000. It doesn't mean that like 125,000 is invested, right?
Correct. Yeah. No. So what it means is like we'd be dollar cost averaged up to a point that we'd basically just be like, okay, we're cutting this off. The rest is used to protect. And
Right. So
that's
it gives
kind
you
of,
a better liquidation price.
yeah. And that's pretty much the mindset and the mentality behind it. But again, that's still can lead into some really weird, awkward territories. But basically, the idea behind it is we're trying to find a happy medium between the bot that we were using at the end of last year. I know it's weird to say this, and the bot that we're currently, or the algorithm, or whatever you want to call it, that we're
Right.
using currently right now. So the bot setup or system that we were using at the end of last year basically resulted us being caught in a short when everything was going long, and the price was just moving up, and so we kind of went the opposite direction where we said, okay, well, we want to take advantage of longs and then protect on the downside of shorts by just saying, hey, we're going to just leave funds set aside for this. And so that was pretty much what ended up kind of happening here is that Ethereum, as we know, back at the beginning of August, just decided it wanted to jump off a cliff and then just never really recover.
Right.
Uh, it's kind of gotten back up into the range, but it still hasn't even gotten back up to where it was, when the market crashed back in, the beginning of August. It was at about 3,300, which is kind of why I use that as like the baseline, is that Bitcoin is blown right through that without any kind of issue. BNB is roughly about where it was, but Ethereum is still down, I think, like 5% or 6% or something like that. Because it was
Right. Right. Right.
3,300, and the highest that it got back up to, I believe, was 3,270 or something like that.
Yeah.
Uh, so it still hasn't even gotten back there. So it's just like we're at kind of a net negative. If Ethereum was performing at the same level that Bitcoin was, would be up in like the 5,500 range, if memory serves, maybe 56.
Wow. Yeah.
We'd be in a drastically different position and situation if Ethereum was
And
performing at the same level that Bitcoin is.
and what do you know like what the profits would have looked like if Ethereum had gone up into like the 5,500 range?
Not really, because it would have closed out of positions. So I
Would
can't
it
really.
have taken new positions though?
Yeah, it would have closed out the positions we were in and taken new positions. So I
Okay.
can't really like speculate on that. It could have
Okay.
been a situation where we ride it up and we're doing like 10% every single month or something like that. Or it
Yeah.
could have been a situation where like if we just thought it was going to keep going, just let it ride. Technically we could do that as well too, and it would have been much higher. But
Yeah.
yeah,
This that this
hard to tell.
Yeah, I understand. This kind of leads into the next question that Lucky has for you is why wouldn't you take a position at 2,400 Ethereum while you wait to get back to the trading range of 3,300?
Yeah, the reason for that is it puts a lot of risk on the funds themselves. So, um, as like a baseline, there's risk and there's reward. Most people just know that as like fundamentals. Just there's some level of risk at any given point in time, and depending on how much risk you're willing to take, the reward is usually drastically offsetting. So like if your risk level is like a 1, your reward level is usually a 2, something like that.
Right.
The problem that you run into in any given situation is like the more that you ratchet up your risk, the higher the reward you usually get. The problem that
Right.
we kind of face with opening up positions in the 2,400 range is that there was nothing to say that we weren't going to break through 2100. In fact, we tested that multiple times. I believe within the last period that I talked about this, we actually tested, the 2100, like to 2200 range, like where it dropped into like 2143, 2187, 2166, and I think it was like 2192. It happened at least 4 times within like a week or two. So it was a situation where basically the only two support levels that were of any consequence was 2100 and 2000. If we crack the 2100 one, it's very likely we just blow right past 2000 without it even slowing down, just due to the amount of sell-offs that would have happened in that given range. Longs being just liquidated left and right at the 2100 and 2000 range. It would have just blown right through it. The next one after that wasn't down there until like 1800. So it would have just cascaded into the abyss.
Do you like, with your current risk, do you know what your liquidation price has been?
Technically, we didn't have one.
Okay. So if you guys had taken,
if we had taken that, we would have faced liquidation probably anywhere from I think it was like the 16 to 1700 range, which is extremely risky.
I gotcha.
It just was one of those things where it was like, even opening up additional positions, it's like we're having to, in order to offset the dollar cost average that kind of took place where we're at right now, where roughly the average was about 3,300. It would have required us to put a substantial amount of funds into this to be able to really kind of do anything, even with almost no leverage.
I gotcha.
And again, it was just something where risk-wise, we just didn't want to take it.
Because you would have had to take funds that were keeping your liquidation price low and put them into.
And let's be clear as well, too. There were multiple instances where Ethereum really showed that like it potentially was going to be bullish and come back up in the same way that Bitcoin was. It got up to like, 26, 2,700, almost up to 2,800. And then it just collapsed where Bitcoin didn't. And that was the biggest issue that we kind of faced, is that unlike Bitcoin, again, which is hitting all-time highs and, will very likely, maybe even before the end of this month, hit 100,000. It's possible. If it doesn't do it this month, I could see it doing it in December.
Right.
In fact, I would be extremely surprised if we don't hit 100,000 before the end of the year. Now, again, I'm not saying, hey, this is, some craziness that's going along with it, blah, 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 this, that, and the other. I just think fundamentally we could see going into the beginning of next year, it's already hit 100,000. Now, even with all of that being said, we still need to see kind of like how Ethereum kind of pans out. We're looking to get out of the positions there and then diversify stuff out, assuming everything's working. But we're probably going to end up taking smaller Ethereum positions as we're testing Bitcoin and other stuff as well too. So that'll most likely kind of start it to be, basically whenever we get out of these positions. But yeah, we're pretty much just trying to play on the safe side of things. To us, it's not worth the risk of trying to go for some moonshot when we could just as well just kind of hang on to things, play safe on the off chance that something goes wrong. I mean, I can't say the number of times, and I'm sure everybody else that's out there that has done any form of trading, and I know it sounds ridiculous to say it like this, but they get into a position where they're like, yeah, I'm going to get into a token right now. It's going up. Everything feels great. And then it just like reverses 30%. And you're just like, well, that sucks. And we don't want to be caught in something like that. It's not where we want to be. So,
right. Yeah. This is true. All right. Let's see. Do you know, and I'm not sure if you know this because Callie's the one that handles this stuff, but do you know how much funds you guys have in each trade and what the leverage amounts are?
There's currently in total about 60%. It's about 55 to 60% of funds are in use at the moment. So we got about
Okay.
45 to 40% just sitting aside right now protecting. So
Okay.
yeah. Yep.
Okay.
And we, as we have moved kind of back up into that 3,000 range, we're using, as you can see, a small amount of that to like get some trades and just kind of eat some stuff up. We've cleared out a couple of our lower positions and we're doing some volatility trading right now. So yeah, it's absolutely a situation where we are taking advantage of the position that we're kind of in, and the way the market is moving up and down here. As I'm sure you guys have seen the last 2 weeks, the NFT bot I think did 2,000 and then like almost 3,000,
Yeah.
and the Ray Fund did like 270 and like 340 or something like that, or 360. I can't
Yeah.
remember
Yeah.
exactly what it was, but yeah, it's
Yeah.
been trading well.
Yeah.
So,
Yep.
yep.
Yep. Things are picking up for sure. I saw Yanni had a question. He's got a couple things. He says, "Do you plan on increasing position sizing when ETH Bitcoin becomes bullish?" I guess the ETH Bitcoin pair.
Uh, I mean, currently the system that we're in right now is geared towards both sides being bullish. More Ethereum, obviously, because that's what it's trading. But we're looking at opening up the ability and the capacity for the bot to not just trade Ethereum, but to also trade Bitcoin, as the primary other as well. So we would be trading like Ethereum and Bitcoin. The problem that we run into with that is we're going to have potentially what I'll say smaller returns, for each one, because it's going to be using less funds. So, like as an example of such, if we were to split the bot up into Bitcoin and Ethereum, we'd have 60,000 one and 60,000 the other, as like an example on the NFT fund side. Um, so that means that the potential returns will be halved, but it's in two different pairs. So yeah, it could very well see some ups and downs within the market. So like as Bitcoin is outperforming Ethereum like it is now, it would have been great for us to been in the Bitcoin position. As an example of such, um, with our first initial wave of testing that we did, um, trading Bitcoin over the last 3 years would have netted us, with zero leverage being used, would have netted us a little bit over 200%. So
Yeah.
yeah, it's something that we're testing, and again, we're not just testing this bullish like ramp up as well too. We're also back testing other years where it's like we've had crushing, pullbacks. So yeah,
Yeah.
it's definitely a case where we're expanding upon that. We've, based on sentiment and feedback from, others from the one team, from the community. It's a situation where we wanted to diversify out a bit more because it really sucked on our side. Basically having to kind of, for lack of better terms, turtle up and just take a beating.
Right.
Um,
Right.
you know, while Ethereum is drastically underperforming and Bitcoin is soaring past everything that we want. It's something we've been in testing, and we would like to get it out as quickly as we can, but at the same time that takes time and we just want to be careful with it. So we're
Yeah.
moving that direction.
All right.
Yep.
Yanni has some more stuff. The USDT pair would be increasing more on pump and dump, less on dump compared to Bitcoin. I don't know what.
Yeah,
I'm
he's
talking.
just talking about the like how the pairing of ETH and Bitcoin is, comparatively speaking. Um, we're generally, in order to kind of prevent any kind of weird losses or anything like that, we're usually sticking to either Bitcoin USDT or Bitcoin USD as part of our testing. And the bot is currently, I believe, trading in Ethereum USDT. Maybe it's Ethereum USD. I don't remember.
Okay.
But yeah, we're effectively not trading two volatile tokens, that are
Right.
paired to each other. So we're not trading ETH Bitcoin. Um, but yeah, that's just a
Okay.
just for safety purposes, so that way we don't run into something weird where it's like, hey, we're having to leverage up or add additional funds to cover something because Ethereum decides it wants to walk off a cliff and not, have a parachute. So
Yeah. And then I think I already asked you this in a way, but he's saying when pullback, can you manual trade the retracement?
We can, but it's a situation where we generally have to be very careful about the way that we're doing it. There were multiple instances where we were asked about like, hey, why don't you open up some positions now? And it was in like the 2,500 range, and then we saw it collapse back down to like 2,200 or 2,230 or 2,280, something like that. And it's like it puts a level of risk. Out there that we generally are just trying to shy away from. So when the market's moving and we're in a position to make money, we're wanting to make money and we're wanting to do well with what we can. But at the same time, we're also trying to protect against the downside of this. Most of the big issues that come with bots is twofold. Issue number one is the team is stealing money. We've seen that left, right, and center with other projects. Issue number two, they become overhyped. That's not even really the best way to word it. They become overconfident with the levels of returns that they have, or they're unhappy. People get unhappy with the levels of returns that are out there and cause those that are doing the trading or the people that are running the system to ratchet up risk. And that ends up being a catalyst for a cataclysmic failure. So it's really a situation where our entire goal in this process is, yes, we love to be in a position where everyone that purchased one singular NFT is retiring in 5 years. That would be great. But we want to make sure that we're trading and we're doing things in a way that 10, 15 years down the road, 20 years down the road, you give this to your kid and they're able to live off of it as well. 70 years down the road, their kid's kid is able to get this and it's paid for everything across the board. We want to get to the point in time where, heaven forbid I'm going to say it like this, but even if the entire team passes away, this will be something where there's going to be either somebody to take up the mantle or it's going to just be able to run on its own,
That would be awesome.
Forever, perpetually, for the rest of time, this is a source of income for everybody's families that have purchased something. So I know it's a little morbid to say it like that, but our goal is to protect on the downside and to win on the upside. So
very cool.
That's kind of the best way I can word that.
Yeah. Very cool. All right. All right. So let's see. Do you guys what's the game plan going into 2025 since Trump will be in office and extremely pro crypto?
So unfortunately, he hasn't really released any information about like what regulations he's looking to implement. I think the best thing that we can look at is some form of regulation in the same sense as like standard stock market. I'm hoping they're a little bit more, to use the term liberal. I'm hoping they're a little bit more fluid on it, and basically are just like, yeah, dude, 10% of your wins is, 10% is the tax, and that's it. Just let people do crypto the way that they want to do crypto. I hope they don't do anything crazy with it. I would love to see some better capacity for being able to onboard and offboard crypto just as a whole, without having to this, that, and the other and explain things. But yeah, I would love to get to the point where we could simply have like, hey, just a 10% tax on your gains here. And just kind of go from there. I think the process for that would be great.
Yeah, because right now the taxes are insane. What is it, like 40%?
I mean, it depends. Like, I mean, you've got state taxes who do their own thing. You've got whether or not certain crypto is considered capital gains versus non-capital gains. If it is capital gains taxed, I mean, you can have, all the way up to something like 40%. If it's taxed as income, it can be taxed as something totally different. I mean, there's so many weird loopholes with it that I really wish they would just sit down and be like, yeah, it's going to be a flat 10% tax. I think that'd be great. I think you can
Yeah.
even go so far as to say is, yeah, let's have just like a 7% tax. Nothing over the top crazy, but I think
Yeah.
if we got some simple regulation where they're just basically like, yep, you owe the government 5% of all your gains, you know,
Yeah.
like not enough
And
where it's going to stifle US innovation in that process. And I think that would really be like anywhere from like 5 to 10%, I think would be viable. You know what I mean? Because
yeah, and it
current
would.
tax rate for anyone I think anyone above, at least in the United States, like I think it's like 20,000 or something like that, is like 8%. So I think somewhere in that same range would be great, so that way,
Yeah.
like if someone is basically just throwing like $500 in crypto and they make like $100 or something like that, they owe $8,
Yeah.
or something like that, where it's not going to break the bank for them. We don't need to
Yeah.
make it complicated. It doesn't need to have all these ins and outs, these loops, these whatevers. Just
Right.
keep it simple. And the positive with that as well too is that in terms of regulation, the lower the taxes, the less that somebody is going to want to take that tax to somewhere else.
Yeah,
So like,
exactly.
the country is like, hey, we're going to charge 5% if you're a resident in the United States. 5% of this is the taxes that you have to pay. They're going to be like, yeah, that's fine. But if somebody's got like dual citizenship in like Eastern Kambukistan or whatever it is, and they charge 5% because the US charges 35%, they're going to be like, yeah, let me pay this 5% tax in Eastern Kambukistan, even
Yeah.
though they don't actually live there. They're just a resident there based on some silly visa.
Right.
So,
Yeah.
yeah. Yeah.
Yep. It would actually equal more revenue for the government.
Yeah. And then that way they can
Um,
just kind of keep their hands out of everything. Just let us do our own stuff,
yeah. Yep. How often are you and Callie in contact talking about trades and future speculation of trades?
Pretty much every day. Um, there are a couple of days where we don't, like communicate with each other on that, and that's normally just because we have other stuff to do. I mean, 3 kids and a wife on my side, and Kelly's got, some weird hours with his job every once in a while. So a lot of
Sure.
times it'll be a situation where like I'll send him like 25 messages in a row, and then he'll send me like 15 back, and then we'll just, we'll communicate,
Yeah.
um, over like a 2-day period or something where we're not actually talking to each other in the sense that like, hey, me and you are talking right now. It would be like, hey, I'll send him like 20 messages, and then in like 2 days he'll send me back like 15, and then like a day and a half I'll send him like another 10 more, and we'll do stuff like that. But
I gotcha.
yeah,
Yeah.
no, we reevaluate everything. We can't do it on a daily basis in the sense that we don't revise or make changes to the bot on a daily basis. Um, I believe in one of our announcements prior, I said the bare minimum for us looking at a data set is at least 30 days, with the most accurate minimum being anywhere closer to about 90 days, and a very, very solid, um, you know, outlook, I guess is the best way to kind of word that, is closer to anywhere from like 6 months to a year. And the reason for that is let's take the last 90 days as an example for Ethereum. If you look at the last 90 days of Ethereum right now, Ethereum was at like 2,300, 2,400, and now it's at 3,100. So you'd look at it and you'd be like, man, that's great. Ethereum's just like roaring back up. But then you add an extra 2 weeks to that, and it's like, oh no, Ethereum's down. And then you add an extra 3 months on top of that. And you're like, oh no, Ethereum's really, really down, down by a lot. So that's kind of the mentality that we have, is that, we can't really fully make any kind of changes on a day-to-day basis. We still communicate, um, you know, but it's a case where data in updating things for the bot and the trades that it does takes time. So it's something where we usually try and do it every like 3 to 6 months. So we kind of make some small tweaks every quarter. Every half year we kind of make a little bit more of a moderate tweak, and usually on kind of like a yearly basis we do some major tweaks. But that's kind of the mentality behind it for us, is that
Cool.
month to month we make some small ones, um, every single quarter we make kind of like, I guess what would be considered like middle of the road. And then major updates usually are going to be on kind of more of an annual basis, so to speak.
All right. Very good. Very good. Let's see. Mitch is asking, can you give any updates on the DApp development?
So the DApp development we did put on the side temporarily, especially for the NFT stats and things like that. Part of the reason for that was we wanted to kind of revise some of the ways that we were looking at the positions regarding like Bitcoin, BNB, Solana, and things like that, and just kind of the bulk back testing that we were doing for those across the board. So it is a situation where we are taking a little bit of time away from that. Unfortunately, we also ran into some instances where some of the team members are a little bit busy kind of coming into the end of the year here. Both Callie and Sanjay are kind of a little bit busy. Vlad's been unfortunately fairly heads down in some of his projects at his work that he's had to kind of get done. So on my side, I've just kind of been going through answering questions for people, learning some of the newer systems that we have. I've been going through and revising some of our LP positions on the Ray Fund side of things to kind of make sure we're in like the range that we're wanting to kind of be in, because with those it's pretty easy. I can just be like, yo, I need you to just sign something really quick for me in the multi-sig and make an adjustment. But for the most part, we've kind of had to kind of put that on the back burner. I believe we're looking at closer to the beginning of next year. Part of the reason for that is we are also doing a potential small revamp, as we kind of, I say small revamp, but we're looking at, like I said, moving to the Cosmos system, and we're doing some research into that as well too. And I'm kind of spearheading that on my side. And so if we end up going that route, we may have a different connection process that we need to have set up within the DApp as well too. So we're trying to just kind of slow play it as we move into the beginning of next year. But that is the goal, is to kind of have, the full decision made if we are going to end up going with Cosmos SDK and setting up in that direction, as well as getting the NFT connection points set up and everything good to go there, the data for it and everything as well. So yeah, it's just a bit of an expansion on a couple of different sides all at the same time. I wish we had, for lack of better terms, I wish we had a little more free time to be able to get this stuff out a little bit sooner. But unfortunately, we've just had a couple of circumstances where we kind of have had to wait a little bit. So that's kind of the direction that we're heading right now. It is a work in progress. We are working on expanding upon that data as well too. So it's not going to be what we're seeing in the standard DApp for like the Ray Fund side of things, or the Ray Bot side of things. The NFT side is going to actually have a lot more information in terms of like backdated trades and some things like that we're planning on having added in there. So that's going to come as part of like our big data revamp. So that'll include things like historical payouts, projected payouts, all that fun stuff across the board is going to be part of that data revamp. Most likely that'll happen in Q1 of next year. That's tentative, because got to have a meeting about that and see kind of like where everyone's at. But I think that's, if memory serves, the last time we talked about that, it should be in like February or March is kind of what our goal is for that. So hopefully that answers that question.
And so you guys are thinking of moving from OPBNB to Cosmos?
So it's something that's being talked about. So the Cosmos SDK, as we kind of talked in our last setup, would basically be moving us to working in the same vein or the same facet as our own personal blockchain. Cosmos SDK is basically just the back end coding system for like the setup. Again, we haven't 100% decided on fully making the move at the transition there, but there are a couple of positives that come with it as well too. Meaning a fully automated system with the 1, 3, and 4 tokens would also be a much easier process for us to be able to do transfers. So to give an example of such, Currently, right now, Trust Wallet has actually added the ability to do cross-chain transactions, which is great, super exciting. A
Cool.
lot of the same stuff is coming with like MetaMask and things like that. The problem that we run into is OPBNB is not one of those that's been added to that list yet. So whether or not it gets added to the list is totally up to whether or not Binance decides they want to go that direction, which is very frustrating for us. But the positive with moving to potentially like the Cosmos ecosystem is that we actually would have a lot more control over where we can have our tokens placed, and as such, where we can have flexibility and farming as well too. So like if we see something where it's like, ooh, farming on AVAX is got X returns, which is 5% or 12% more than over here on Binance Smart Chain, we can go over there and farm that, and it doesn't cost us anything to move stuff. We can just, it comes onto our network, and then we just shuffle it right off over to AVAX, and boom, we're good to go, kind of thing. So
well, that's that, and that sounds good.
Yeah.
If you guys did that, that means that RayFi token would move to Cosmos.
Correct.
Would you guys keep it paired with a stable token, a stable coin on Cosmos?
Yeah. So, and again, to clarify, when we say Cosmos, you have to think, and this is what I brought up last time, IBC. So, the Internet of Blockchains, where it's basically
Right.
we would be our own network. So using Cosmos is just like a name piece for it, but basically the process would be is we would end up removing the liquidity. We'd move to our own network on IBC or the Cosmos SDK, and then we'd reset it up with USDC or USDT as the pairing to our token. So everything would remain the same. In the same way that we moved from Binance Smart Chain to OPBNB, we would just move everything from OPBNB over to our own layer 1 blockchain, and it would just be dropped right on there. No problem. Trading would commence, everything without any kind of issue. And the cool part about it would be is you would also be able to just directly buy the token straight from Binance. So a lot of people that, as an example of such, they use like Binance Smart Chain for like, oh, let me just, onboard everything through Binance Smart Chain, and then just, do cross-chain transactions through like, say, Rubix or something like that. We would have the same process with ours. Ours would be interconnected into that. And then if you wanted to, say, take some of the BNB that you earn from 4 token, and you're like, I want to get more 4 token by being able to take advantage of the vault for it, let me go buy some RayFi and then have that staked. Boom, you could do that in like 2 transactions. So it'd be very, very simple process in that aspect. Versus now, what you have to do is you're like, oh, I got some BNB from 4 token. Let me move the BNB through this bridge on the OPBNB website, and then now it's over there. Now I have to go to PancakeSwap, and now I have to buy it on there, and then I have to go from PancakeSwap, and I have to go take my RayFi into there, and then boom, it gets paid out there. But now it shows up over here in this other place, so now I have to bridge it back over. We're just trying to kind of negate that as much as we can, and that's the reason why we're kind of looking this direction. Is the process is much, much simpler in terms of interconnectivity. And that's really what we're looking to do, is because we don't want you guys to have to go through 13 clicks in order to do one simple thing. The idea behind it is keep it as simple as possible, allow us to have as much interconnectivity as possible. And with that interconnectivity, we can do a lot of great things. Again, that would be like airdropping tokens right into people's wallets for like 4 token, 3 token, 1 token. Super simple.
Okay.
So yeah, it's just it's processes that all kind of like layer together. I don't want to go too far in detail, much more than what we've said, because again, it's something down the road, but it's also something that isn't 100% set in stone. It's a learning process, and we're working with the Prism team. I brought them up in our last AMA. We're working with the Prism team to go through and kind of learn these processes, learn the setup. We're working on, doing our first, DApp setups and stuff like that, our application rollups, and just kind of learning some of those things. I'm trying to work on setting up some time to sit down with them for a few hours this weekend and work on not only setting up our first, application on their test net, but potentially layering some other stuff, including our vaults and things like that, so we can test that out on their test net as well. So it's going to be fun. A lot of extra stuff on the side, but that's stuff to come down the road, and not all of it's finalized. So we'll leave it there.
Alrighty. Sounds good. List the last question from Lucky. He says, what data are you guys accumulating, and where do you get your insight?
So a lot of it just comes from us kind of bulk tweaking and testing things in terms of how trades end up kind of panning out. So what we do is we basically set up a parameter of objectives for our bot to kind of go through and kind of play it out and do effectively like thousands of multi-year tests. And then we come back and we say, okay, so based on these results, we need to tweak, opening and closing positions to adjust 0.25% this way and 0.75% that way, and we kind of make some changes and like retest things across the board like that. So effectively the system can come back through and provide results to that. So as an example of such, kind of like what we brought up earlier, if we notice that the bot isn't taking profits because it's trying to sit and take a larger profit, well, we tweak the bot and the algorithm, or whatever you want to call it. But basically we tweak the bot to trade at a lower threshold. So an example of such is, like I said, if the bot is expecting a 10% return here and it's waiting for 10% and has to wait, say, 2 months to hit 10%, well, if it's trading at around 8% gains, we'll just take the 8% gains, Again, that's just an example of numbers, but we'll take the 8% gains and then we'll retest it and we'll say, okay, so it opens at X position. Y position is where it's trying to get out. So instead of it being Y, which it's not reaching, let's do Y minus 0.5. Does it hit? If the answer to that is yes, awesome. That Y is now Y minus 0.5. And so that's the new range that we're at there. And so then we run the tests again and we see how that all kind of turns out in the long run. And so a lot of it is just kind of bulk testing and retesting to see like if the parameters that we're providing it are within a range that's acceptable to, one, the returns that we're looking for, and two, the risk that we're looking for as well. So yeah. Okay. And we have the ability to test everything from no leverage all the way up to, I think it's 100x. So normally we test at no leverage just to kind of get like a baseline for what we're looking at. And as I brought up earlier, one of our initial tests before any refinement, it did over 200% over the last 3 years. So, yeah, we're working on some stuff. It's looking promising so far, but again, we don't want to rush anything.
Right. I gotcha. And 200%, that's with no leverage, right?
That was with zero leverage. Yeah. So yeah, basically for every 10x that you add to that, you just add a 0 to the end.
Yeah. So, yeah. Very cool.
So like if we were doing 10x leverage, that's 2,400%. So
very cool. Very cool.
Yep.
All right. Blacksmith asked if you could take a moment or two to talk about diversification strategies that you have in mind for when we start crossing that 15 million mark with the NFT fund. I don't know what he's talking about, really.
Yes. So we're actually doing that now. So the diversification that we were talking about is we wanted to spread the funds out so we're not trading everything in one place. Okay. So as hopefully the United States becomes a bit more friendly with crypto, we can potentially start. And here's the thing that goes with that as well, too. As much as people hate to say this, and as American focused as this is going to sound, a lot of the pathways that are set up for crypto or will be set up for crypto are going to go through the United States. The United States took an extremely hard stance. Not even during the Biden-Harris administration. Yes, it ramped up more there, but even from the Obama administration through the first Trump administration, and then much more so within the Biden-Harris administration, the United States was relatively unfriendly to crypto, just as a baseline. And as the United States becomes more friendly with it, generally, as we see with most other things, European nations have a tendency to follow as well too, if they're not already paving the way. And off the top of my head, I can't remember which specific European nations are relatively friendly to crypto, but there are definitely a few that are out there where I wish we would kind of take some of the same or similar stances to them, where, as I brought up earlier, just have a simple tax rate like 5 to 10%. But
Right.
in saying all of that across the board, as the United States will likely become more friendly to crypto through the second Trump administration here, from everything that he said, we very well could see additional crypto firms opening up within the United States, even following the same regulations that, say, Coinbase and things like that follow. And there's a ridiculous amount of regulation on them because they're traded on the stock market as well, too. We could see European ones open up also. And the positive with that would mean as we start to get into these higher and higher amounts, we can end up diversifying that out to different places. So that way we potentially don't have to run the risk of like an FTX happening.
Right.
And that's kind of one of the pauses that we'd have in that situation. Beyond that as well, too, we would also want to continue to diversify into other coins and tokens as time goes on. So that's the other half of it. So we're starting to do that right now. One, because we walked face first into one of the most brutal drawbacks and lack of recoveries I think we've ever seen for a token just across the board. Even Dogecoin is trading, I think, over like 40 cents right now, which is insane compared to Ethereum.
Yeah.
It's just such an underperformance. It just kills me to look at it all the time.
Yeah.
But that's what we're looking to do in this instance. I'm not saying we're going to trade Dogecoin, but what I am saying is like we're looking to trade more of those stable blue chips. So we're going for like the Bitcoin, the BNB, Solana, XRP, stuff like that, where as things begin to expand, we're looking to kind of go those directions with it. So
Cool.
yes, that's the goal of the diversification side of things.
All right. Let's see. Still kicking had a couple questions, and this will be like the last two questions, unless maybe we can wrap this up in an hour. He asked, has money from the taxes been invested yet?
I don't believe we have, because we were trying not to liquidate anything at the moment here. I don't know. I know we just kind of reallocated some funds to the treasury and stuff like that, but I don't believe we actually liquidated beyond that as well too, unless that's something that was done between Kelly and Sanjay that I'm not aware of. So yeah, I believe they're all still sitting in the treasury. We haven't done anything with it yet. There's a possibility we might, we might just end up putting that into the whatchamacallit fund. I'm blanking on it right now. Oh my gosh.
The compounding fund?
No, not the compounding one. I'm pulling the initiatives wallet, where it doesn't actually do anything. It just kind of sits in effectively what would be considered like a burned wallet, where the initiative wallet just isn't receiving any kind of payouts. I think we may end up, at least for the time being, just putting it in there so it doesn't like do anything. I'm not sure. We haven't really gone into too much further with that. Part of the reason why we're not doing anything or liquidating it to the market is the market has been very, very down on the OPBNB side of things. RayFi is down a little bit as well, too, as I'm sure you guys have probably noticed. We're at about half a penny at this point in time. So with that being said, we don't really want to cause any more downward momentum, I guess is the best way to kind of word that. But if we do end up kind of revamping and going with the IBC/Cosmos SDK side of things, it would be an instance where we want to kind of have some stuff set aside for incentives for not just the holders of RayFi as a whole, but for any of the expansions that we kind of have going on that direction as well too. So it's
All
just
right.
kind of a little bit of a give and take, where at the moment we're just not doing anything with it.
I gotcha.
Yep.
All right. And last question from Still Kicking again. He said, how many trading positions are still locked and waiting for certain prices to hit?
Yeah, so I actually brought that up earlier. About 55 to 60% of the original positions that we had are still open. So
Oh, okay. Gotcha.
yeah, that's where we're currently trading with about 40 to 45% of what we're happy to trade with and what we feel comfortable with trading with. And we were able to do those 2% plus weekly back-to-back returns.
Yeah.
Yeah.
Yep.
So
Yep.
we're pretty happy with where that's at. Obviously we'd be much happier if Ethereum was just kind of like, yeah, we're at 5K now today, guys. That would be great. But
Would the bot be able to take advantage of that though? Like,
oh
if
yeah,
it was,
oh yeah,
okay,
oh yeah. Because
okay,
like here's the thing is, even if it opened up all of its positions all the way up to like 4K and then it
yeah,
just kept going, there's nothing to say that we have to close those positions out. So
I gotcha.
that's one of the positives about being on the long side of things, and not worrying necessarily as much about the downside, is that as it's going up and to the right, we can effectively tell the bot, hey, don't close these positions right away. And so we can take full advantage of that as time kind of goes on. So like if if the price of Ethereum were to shoot up to like 5K tonight, we could see something like, I think Callie and me did the math on it, where we could see upwards of like 43% or something like that returns, which would
Holy
be
cow.
yeah.
That'd be
Um,
pretty awesome.
yeah, but I mean, again, the likelihood of that happening is super slim. It just kind of
Right.
was one of those, hey, me and Callie were talking about it, and we were like, what happens if this kind of occurs? So yeah,
Yeah.
it just, again, being realistic, not going to happen
Right.
unless something cataclysmically changes that I'm not aware of going into this evening. Yeah, but no, it's
All
it's
right.
just kind of one of those things where it's just going to slowly do its thing as it kind of creeps back up and goes through the top end of the range. Um, it'll hold on to a couple of positions. It'll close out some of the other ones, and it'll be a situation where we'll still make some good profit. So yeah,
Cool.
even right now though, we've seen the bot isn't even trading at full amount either. It's trading at about 40 to 45% of what it actually could trade at.
I
Um,
gotcha.
yeah.
I gotcha. All
Yep. Yep.
right. All right. Well, very good. We finished this in less than an hour. So
I
thank
believed
you
in
very
us.
much for, huh?
I said I always believed in us. Um,
Thank
but
you
yeah, no, I
for
did want
answering
to
all those
just
questions.
yeah, absolutely. Just to kind of recap a couple of things, just to make sure in case somebody's joining us super late, or in case somebody's skipping around to the end or whatever it is. Um, the bot is trading. We are well within the range that we want to kind of be at. There are about 40 to 45% of the funds that are a part of what we consider the trading funds that are actively working. That's how we've seen the returns the last 2 weeks. So we're very happy with the bot being kind of back and active and doing what it's doing. We're doing our best to expand out what the bot is actually capable of trading. So currently the big three that I believe that we're looking at, unless I'm mistaken, again, is going to be Bitcoin, BNB, and then Solana, probably in that order. I can't imagine it'll change to something else. Solana is kind of a little bit of a meme. It's kind of like what BNB was like 4 years ago. Nothing against BNB, but it's definitely a situation where it's like we'll have to see if it actually continues to be a staple in the market like BNB is. So that's why Bitcoin and BNB would probably be our next two trading pairs or whatever you want to call it. And then from there as well too, data and information, we're looking for that more in quarter 1 of next year. If that changes, I will get back to you guys on that and let you guys know, but that's kind of the goal for right now. That'll be a part of our big data overhaul that we're planning on doing, which will track things not only for the the NFT side of things, but also for the RayFi side of things, including like total payouts, your payouts, historical payouts, just in general across the board, like when they've happened and how much they were, for what token they were, all the fun stuff like that. And then that data will also come over to the NFT side of things when we start doing this payouts as well too. It'll also hopefully contain projected payouts for the NFT side of things as well.
Cool.
So like if we're doing as like an example of such, like if we do 10% the first month of 2025, just using this as an example, don't hold me to it, please, for the love of all things holy. But if we do like 10% the first month, which would be like 12, I think would be like $12,000 or something like that, because we have 120 right now. 10%, 12,000. Yeah. It basically would come out and be like, yeah, here's the payout. Here's what you should get based on the amount of NFTs that you have in your wallet. So yeah, all that is going to be in that data update. So we're looking to kind of do that at the beginning of next year.
Very cool.
So, yep, those are the big ones I wanted to just kind of reiterate and touch on really quick.
Awesome. Well, thank you for that. And thank you, everyone, for being here. That was here. Thank you, Yanni, for your questions and everyone else. And yeah, thank you, Moongod, as always, for taking time to let us know what's going on.
Yeah, absolutely. And I appreciate you taking the time to chat with me here today, Oliver. Great as always, man.
Yeah, man. Always a pleasure. All right, everybody. See ya.
See ya.